Motherson, Sumi and Maruti. What is it that we should watch out for?
Among the auto players, what we like is Motherson, Sumi on the auto Yang side. The rationale is quite simple. If you look at the stock has corrected more than 50% from the top, obviously backed by poor earnings. But if you look at the history of both Mr. Chand, the promoter, and the company, they are very margin-conscious company. The current EBITDA margins of SMR and SMF are quite on the lower end, so we don't see much margin disappointment from the company. Globally, what has happened on the macro side is ECB has talked about pumping money. China has started taking cognizance of the auto demand, which is reflected in the number improvement. US is on the rate cut path. While it's tough to say that whether there is a QE coming or not, but that's something which we see as a possibility. And if anything of that sort happens, Motherson has more than 70% of revenue coming from global auto play. Now that gives us a lot of comfort. With the government talking about what they are talking about in terms of bringing back the demand, Motherson is another beneficiary, whether Maruti gains the market share or somebody else gains the market share. With Make in India as a concept, if auto companies comes and make up setups in India, Motherson Sumi is going to be their suppliers. So overall, it's a stock where we see a lot of value and an opportunity both.
And you like Maruti too?
Maruti we like. I think in this run-up, we would be slightly cautious at these prices, but it's something where we will add in our portfolio at every fall. Because the multiples at around 22, 23 times 1 year forward earning, I think there's much less of disappointment scope there.
Okay. Mridul, you also had a call on HDFC Bank, correct? So at current levels, also expensive stock, but you are still suggesting put your money into quality?
That's right. Now, HDFC Bank is something where you will have to be perennially bullish because of the quality, both in terms of the book and the management. If you look at HDFC Bank, while it has gone up around 20% post the split because of the announcement of the tax cuts, they are one of the biggest beneficiaries of the tax cut. The reason we like HDFC Bank is it's trading at a discount to Kotak Bank in a relative terms. And the other peculiar analysis which my team did, is that in the bull market, HDFC Bank outperforms the market by 20% in a year. And in a bad market, it outperforms the market by around 8 to 10%. If you look at last 1 year, HDFC Bank has outperformed the market by less than 5%. That because they did a fundraising. HDFC Bank, whenever they do a fundraising, a QIP, for the next 1 year, they doesn't outperform the market. And that gets lagged up over a period of time. So we started buying HDFC Bank after the split. We were lucky to time us at around 1,050, 1,080 in our client's portfolio. We believe 1,400 is coming pretty soon for us. The market share and the mind share of people traveling and people investing together, the float of this company is quite low, even if the market cap is quite high. What it does is it creates a strong hand demand here. Haven't looked at SpiceJet because we typically look at only large caps. We are not invested in Inter-globe because we always find it is slightly expensive, but that doesn't make it bearish for us. But will I put my long-term money into it at these prices? Probably no.
Okay, of course, the stocks also added its 52-week. Thanks a lot, Mridul, for joining us and taking us through your fundamental